And this idea that inflation is eating away at purchasing power. I was looking at the data just recently. The aggregated inflation since January of 2020 to today is over 22%. So that means that $1 of purchasing power in January 2020 today is the equivalent of 78 cents. And so if you've just been sitting in cash, you're literally losing purchasing power. You're losing value of your money. And so you got to get out of cash and get into some other type of asset, whether that's gold, that's Bitcoin. Some people even buy stocks, but getting out of cash, I think, is kind of the intelligence test of financial markets for this generation.
Right. I always say if the government can print it, I don't want it anymore. But anyway, so tell us, well, we were talking before the thing began about what's going on in New York City, about the luxury hotel accommodations for Biden's immigrants coming across the border.
Yeah, look, I think that there's this, across the country in general, I think that there is just a degradation of, one, leadership, two, what I'll call the system is probably the bigger story. And what that means is if you go back 10 or 15 years, not really that far, and you look at how society operated, maybe even some of the values that people all agreed upon, those seem to be loosening at best and at worst falling apart. And so in New York City today, any large city with 9 million people has a lot of problems. They got a lot of complexity that they got to handle. Now there is this compounded complexity that comes from migrants, and there's a lot of them showing up. And so, in America, we try to be as hospitable and humane as possible. And you want to get these people some sort of housing. But you're on an island, specifically in Manhattan. What are you going to do? And so one of the things that they have tried to do is they've gone to hotel owners and they've said, look, we will buy all of the hotel rooms that you have. We'll book them out and we'll even pay you, not market rent. We'll pay you a little bit more than the market rate so that you will be willing to do this. And so if you're a hotel owner, somebody comes to you and says, hey, normally you're 60, 70% occupied. You'll be 100% for the next 6 months and I'll pay you above market rate. It's pretty tempting to do. But what that ends up doing is now it is providing, more and more of an incentive. More people keep coming, more people keep showing up. And so I don't know where it ends. But what I do think is that there's an entire portion of the population that's saying to themselves, okay, that's just one topic, right? If you look at politics, there's, 50 of these topics. I'm losing faith. I'm losing trust. And so what I want to find certainty in an uncertain world. And something like Bitcoin is being a winner or kind of getting the benefit of these people looking for certainty, because there's an entire generation of people who think that Bitcoin is that thing that no one can create more of and no one's going to be able to take from.
While Anthony primarily addresses the younger generation in his speech, it's noteworthy that older generations are also realizing the merits of cryptocurrencies like Bitcoin and XRP over the traditional fiat system. This growing awareness is often underestimated. In the past 2 months alone, we've witnessed tens of billions of dollars being invested in Bitcoin by the boomer generation alone, and this figure continues to rise exponentially each day. What's particularly striking is that Bitcoin operates independently from government control, a point further elaborated upon by Robert Kiyosaki.
Right, but the other thing too is that Bitcoin is outside the control of the government, and our government's lost control. Like I was saying to Anthony that the last time I was there, they almost wouldn't let you shop. I go out and knock on some high, Fifth Avenue door. They want to make sure I wasn't carrying a gun, wasn't going to steal anything. And our whole society is breaking down, which is why we're having this special the next couple of weeks. All the experts on Bitcoin and the people I turn to and I ask for information on why Bitcoin is the future. So I have lots of gold. I own gold mines. I have lots of silver. I own silver mines. And I own, like I said, 65 Bitcoin. And I understand the advantages of gold, silver, Bitcoin. They all have their advantages. But Bitcoin is probably the least understood. So, Anthony, why are you so bullish on Bitcoin?
Well, if you think of, what makes gold, let's start there first. Like what makes it valuable, right? It's this idea that it has sound money principles. To your point, it's outside of the system and no one can create more of it. Right. And that's really attractive. And it's done incredibly well since 1971 because outside the system and no one can create more of it. Bitcoin is the exact same thing. But rather than it being in an analog version, it's in a digital version. There's a software that has been written that allows for a finite supply, 21 million Bitcoin. It's outside of the system and no one can create more. And so one of the reasons why I'm probably the most bullish on Bitcoin is in my career, anytime that you saw something that was the digital version of an analog asset, the digital version usually ended up becoming worth more than the analog version. And so if you think about music, right, you could go buy one CD. Now you have Spotify or Apple, and you can go and stream every song in the world. Do the thing of Amazon having one bookstore versus having any book at your fingertips through the Amazon store. And so same thing here is I think that Bitcoin eventually, because it is digital, but it has those same properties as gold, people around the world will have easier access to it. They'll eventually continue to buy it. And because you have a finite supply asset, you have increasing demand, the price of that asset has to go up to accommodate everyone.
So this is my question, because I've asked this all the guys. I grow wholeheartedly with you, but I'm not Satoshi. I'm Japanese, so I'm not Satoshi. What's his Nakamura or something? But anyway, what is happening with all these other guys who are creating their own Bitcoin? I don't know their names, but I just stay with Bitcoin, but I don't go outside of that, which is maybe stupid. But do you look at other coins?
If you kind of think of the traditional financial markets, you have money, right? So you have dollars, you have euros, you have yen, you have pesos, etc. I would even put gold in there, right? But things that are trying to hold monetary value, either as a store of value or a medium of exchange. And then you have tons and tons of companies. And these technology companies or non-technology companies are all competing with each other. But in your day-to-day life, you are a monetary maximalist. And what I mean by that is if you live in the United States, you get paid in dollars, you save in dollars, you pay your taxes in dollars, right? And you spend dollars. I don't, in the United States, sit and hold Mexican pesos or hold euros or anything else. But if I lived in Mexico, I'd be using Mexican pesos, right? I wouldn't be worried about dollars or other things. So you become a maximalist, only using one currency to save and to spend. I think that's what happens in the digital world as well. You're going to have one currency. You're going to use that one currency, right? So let's say Bitcoin becomes that store of wealth and the thing you want to spend. But nobody I know has 100% of their wealth all in a single currency with no other assets, right? They have a stock. They may have, oil or some other commodity or whatever.
In the world of decentralized finance and cryptocurrency, diversity is key. No one I know sticks to just one cryptocurrency, and that's the beauty of it. While Bitcoin may be remarkable, there's a plethora of other options available. If a single entity amasses too much Bitcoin, potentially wielding excessive control over the asset, we have the power to pivot. The system allows us to transition our funds elsewhere, preserving autonomy. Moreover, blockchain continually introduces innovative advancements, opening doors to new technologies. We are merely scratching the surface of cryptocurrency's potential, with groundbreaking developments anticipated in the coming years. As more brilliant minds enter the space, particularly in AI projects, the possibilities become limitless. I'm genuinely thrilled for what lies ahead, and Anthony's insights on this front are truly intriguing.
And so the rest of the cryptocurrencies, they're not trying to be money. They're trying to be technology platforms. And so just like Amazon, Google, and Facebook all compete with each other, many of these other cryptocurrency tokens are doing the exact same thing. And so what I tell people is my version of kind of the future is that Bitcoin ends up being the big winner when it comes to a currency and will store value. Think of it as just digital gold. And then all of these other tokens, they're going to be hyper competitive. There will be major winners and major losers. And so if you want to go and try to understand the technology and predict who's going to be the winner, who's going to be the loser, you can go do that just like you can in the stock market. But if you're simply just looking for a store of value, Bitcoin will kind of be the thing that'll serve that purpose for you.
That makes more sense. Well, thanks for that. And then we have this thing called a halving. What is a halving?
Yeah, so because it is a digital asset, everything is programmatically created, meaning that somebody wrote the software, Satoshi Nakamoto, and it can't be changed, right? Or it's not going to be changed. And so part of that was if you have 21 million Bitcoin, how do you get the 21 million Bitcoin into circulation? Right? You almost think of it like it's sitting in like a digital bank, but you got to get it into the hands of the people. And so the system that was created was that every 10 minutes, 50 Bitcoin would be released into circulation. And that would go on for 4 years. So every 4 years, 50 Bitcoin was being given out for 10 minutes. But after that 4 years, 50 Bitcoin dropped to 25. So it got cut in half from 50 every 10 minutes to 25 every 10 minutes. That continued for 4 more years. And then we get cut in half again from 25 to 12 and a half. And now this has continued all the way till today. And so every 4 years, there's quote unquote halvening, which is really just we're cutting in half the amount of Bitcoin that comes into supply every single day. So today, 900 Bitcoin per day come into the circulating supply. Starting after this next halving, it'll end up being 450, and that will continue for 4 years. And so it's simply a supply shock, which if you pay attention to gold or other types of commodities, when you have a supply shock and demand stays the same, usually that ends up pushing the price up higher.
So, and another thing we're going to talk about is, before I go on the second half, I want to get into it with you, but this thing called the ETF is coming up. But what would you suggest to anybody who has never invested in Bitcoin? What cautions would you issue? What would you say?
Yeah, people always ask me, what should I do? And the first thing I tell them is, go learn. Go read first. Don't do anything with your money. Go learn. And I think the best way to do that is you can just search on Google Bitcoin white paper, and you can go and you can actually read. It's a 9-page paper that'll allow you to read exactly what Bitcoin is, and that'll help you get started. You can Google what is Bitcoin, etc. What you have to understand about Bitcoin is it's highly volatile, right? It goes up a lot. It goes down a lot. Sometimes it goes down as much as 80%. And so you've got to really understand what you're buying. You've got to only put money in that you're willing to lose. And then I think that also people should really spend the time and only buy assets that they feel like they understand. And so when you realize I've done the work and you're compelled, sure, then go buy Bitcoin just like everyone else seems to be doing, but only do it after you've really done the work and understand the risks that are associated with it.
I also heard this one guy before we go to break that old guys like me shouldn't buy Bitcoin because we can't take the heart attack when it goes down. What do you think?
No, I mean, look, when you want financial returns, you need volatility. It's just that people say, hey, if something goes up a lot, it's being volatile to the upside. You like that volatility because it's going in the direction you want. What people don't like is when the volatility goes in the opposite direction that they want. And so again, if you're going to look at or hold a volatile asset, then what you need to do is just understand it's going to go up, it's going to go down. And really it's about being time in the market, not necessarily timing the market. So don't try to pick tops and bottoms of the market. Just use great financial principles like buying the asset and holding it for a long time.
Series, because Bitcoin, all the young guys are kicking our butts right now. And I've been an old guy for all these years. I call young guys like Anthony Pompliano, and I find out. So I started buying a little bit at a time. So did have 65 Bitcoin. And my question to you, Anthony, is this. So I think Bitcoin today is about 45,000 or 40,000 today.
Yes.
So what happens if somebody doesn't have 40K?
It's truly mind-boggling how far we've advanced in such a brief span. This interview was just a few months ago, and in that time, Bitcoin has surged by nearly $30,000, essentially doubling its price. Astonishingly, it doesn't seem to be losing momentum anytime soon. But what's even more incredible is what Anani is about to reveal next year. It's going to be truly remarkable. So listen closely, folks. The beauty of Bitcoin is that you can buy fractional pieces of it. So one Bitcoin is, call it $45,000 or so. But you can go and you can buy $5 worth of Bitcoin. You can buy $10 worth of Bitcoin. And you don't need to have the $45,000 to buy a full Bitcoin. I think there's a lot of people who, that's a shiny thing, right, to get to one full Bitcoin. But you can start, like many people do, with, $5, $100, $1,000, whatever you want to kind of start with, and just buy a little piece of Bitcoin to really kind of start that journey.
And who does that? Who does that brokerage?
You can go a number of different places. Coinbase is probably the most recognizable exchange in the United States. It's a publicly traded company, like $30 billion market cap valuation. But now we also have these ETFs that are coming, the kind of Bitcoin spot ETFs that recently got approved as well.
Right. And so before I got one more horrible question to ask is our buddy Sam Bankman-Fried. And what the hell did he do? I mean, what did you guys think of him? He's about your generation.
Yes, Sam was a young entrepreneur. He built a company very quickly called FTX. It kind of rose up. They had billions of dollars of customer assets on their platform, and they did some pretty nefarious stuff, it appears. And eventually, their scheme was exposed. Regulators and law enforcement stepped in. He eventually was arrested. He went to trial. He was convicted and is now awaiting sentencing in that situation. And so, anytime that there's a new space or new industry, you can go all the way back to the internet, cell phones, etc. People are going to do bad things, right? But you've got to be able to separate out the bad actors from the technology itself or from the innovation.
Now, that's my question. How do you protect yourself from an SBF, Sam Bankman-Fried?
Yeah, I mean, look, the crazy part is this stuff happens in the traditional financial system as well, right? That there's frauds all the time and crime and et cetera. And so
my generation had Ivan Boesky, he took a lot of people's money.
I actually just read a book called Witness to a Prosecution, which was written by Michael Milken's lawyer. And obviously, Ivan Boesky is a key part of that book. Yeah. If you think of kind of common practices, so one, use common sense, right? If it sounds too good to be true, it probably is. It's kind of like a really simple one. But I think also what you want to do is you want to use regulated exchanges. So Coinbase being regulated in the United States, right? In the public markets, overseen by the SEC, et cetera. And then the other thing is now that these ETFs are coming to the market, they're provided by BlackRock, by Fidelity, et cetera. And one of the people have to kind of think through is you're not actually buying Bitcoin when you buy the ETF. You're buying exposure to the price of Bitcoin, but it's different than Bitcoin. And so usually what I tell people is if you want to own Bitcoin and make sure no one can take it from you, you can actually withdraw it into something called self-custody. Think about going to the ATM and taking the money out and putting it in your wallet. You own it. You got it in your pocket, right? No one, unless somebody comes and hits you over the head with a hammer, is going to get that cash from you. Same thing with Bitcoin is you can basically take self-custody. What most people, though, they're worried about it. They're scared, right? They don't know how to do it. And so if you don't want to spend the time to learn, then you've got to either go and use something like a Coinbase, or you've got to go and look at these ETFs. But just understand that you don't actually own Bitcoin. You simply are getting price exposure to Bitcoin when you buy the ETF.
So would you buy an ETF, Bitcoin ETF?
So I have in my retirement account exposure to one of the ETFs. And, it's in my retirement account, getting self-custody of retirement funds. There's a whole bunch of complexity there. So definitely in that situation, it makes sense just buy the ETF. In my non-retirement account, no, I'm buying actual Bitcoin. I want to hold the Bitcoin, right? I want custody over those assets. And so I think what you really got to do is just kind of, what am I trying to accomplish here? How comfortable am I in terms of self-custody? And each person will make that individual decision for themselves.
Well, let me, you can shoot my theory full of holes if you want. But my theory is when you go to an ETF, it raises the price of Bitcoin because it's a fixed amount, 21 million. But when it went to ETF, you opened up demand. I mean, you made every mom and pop, who may have $1,000 in their wallet, or they may have a retirement account, every retirement account around the world. It opened that up to supply demand. But when you went to the ETF, the demand went through the roof. So that's why people are calling for $300,000 Bitcoin, $500,000 Bitcoin. And I bit the hook, line, and sinker. You don't chase shiny objects. But when I heard the ETF was coming in, I mean, it's not much, but a little 65 coins. If it goes to, let's say, 100,000, that's pretty good money. You know what I mean?
Yeah, I think that definitely the ETF will increase demand. One of the interesting things is there was a lot of financial advisors, a lot of asset managers that they were kind of curious about Bitcoin and they were trying to learn about it, but there's an overhang. The regulators hadn't really kind of approved it yet. There was no, way to buy it via an ETF. Now that that's been removed, my guess is that not all, but many financial advisors, they'll say, let's go put 1% of our kind of clients' assets in this ETF. Let's go buy a little bit into the portfolio. It seems to have done really well over the last 15 years. I think it'll still do well, but I'm not going to go take 100% of my clients' assets and put it into it. Well, even though it's only, let's call 1%, that is still an increase in demand that's pretty meaningful for an asset that today is about $900 billion. And so I do expect the ETF to open access, as you said, increase a kind of capital flowing into the asset class. And ultimately, over the long run, it will help to push the price higher.
If only Anthony knew just how much Bitcoin ETFs ignited the price of Bitcoin. Yes, his prediction was correct, but not over the long term. In just a couple of weeks, Bitcoin skyrocketed. Now we have hundreds of thousands more people buying, trading, and selling Bitcoin every single day, which is absolutely phenomenal. And this is just the beginning. More and more places are embracing Bitcoin ETFs, and older generations are jumping in, deciding to buy, trade, Babbitt, and even open accounts on crypto exchanges outside of ETFs. This marks the start of a crypto revolution that will truly transform many lives. We need true stores of value that are incorruptible, and Bitcoin embodies this. Many other cryptocurrencies share this vision. Remember, this is not financial advice. Always do your own research. But it's truly remarkable to see older generations embracing cryptocurrency. Shout out to all of you who are new to this space. If you enjoyed today's video, hit the like button, comment, and subscribe. See you next time.